Is the spring housing market a flop? We're going to talk about the housing market crash. I have with me John Flynn. Go to his channel, check him out. Great content that he's putting out there. I especially like some of the boots on the ground stuff he's done recently. Just fantastic stuff. One of the only truthful realtors in Canada. John, how are you doing, my friend?
Pretty good. Thanks, Luke. I'd hopefully like to think I'm not. I think there's a lot of truthful realtors. They just are scared to share their real opinion for the fear of losing their clients and whatnot. But yeah, a lot of people tell me that also. And maybe the only outspoken, truthful realtor, one of the few anyway. And I agree with that for sure. It's a spring market, right? It started
Mhm.
early this year because the weather was very mild in Ontario, and we
Mhm.
had tons of activity out there. Now I'm seeing it start to slow already. And if you look at 2021, you look at any chart in 2021, we had a big boom in February and March. Prices increased, and then they were flat and even declined in Ontario, especially going into April and May. So I'm starting to see that same trend. I've been tracking the data from March already, and it looks like we're going to have an end to the spring early this year in the housing market anyway.
Oh, that's really interesting to know because obviously you're seeing so many conflicting headlines. And even I've talked about this where it's like, back in January, they're really trying to pump the spring market's going to come roaring back. Now's the time to buy. And then literally they flip flopped and were like, oh, it's too early to say all clear. So what's happening with sales? Are sales really much higher than last year? Is it the volume is starting to decline already, like you're saying? And what's happening with inventory around Ontario and around the country?
Yeah, so I've actually done a recent chart on the sales, and actually I did all of Canada for the sales. Now, the sales are inversely related to the interest rates. So we're going to see press sales again this year. This is my forecast. Last year we had about 443,000 sales in Canada on MLS. This year we're maybe a little bit more, but we're going to see that correlation or the inverse correlation with the interest rate. And you can look it up on my Twitter there, Luke, and put it on the screen if you want. This is very simple, right? The Bank of Canada rate, the overnight lending rate, compared to the MLS sales, the number of sales, not the prices. And especially since 2021, once those interest rates get really extreme, the correlation is almost perfect. I actually had some scientist, some data scientist or something, ask me about the correlation coefficient. So I actually went and figured it out for him. And in the last 3 years alone, it's a negative 0.91, and zero point 0.1, negative zero point 0.1 is almost a perfect inverse correlation. So in the past few years, we've had almost a perfect correlation between low interest rates, high sales, and now we have high interest rates or apparently high interest rates and low
Mm-hmm.
sales. So until those interest rates come down significantly, the sales are not going to pick up. And I can overlay immigration on this, and immigration doesn't matter. We've had
Mm-hmm.
super high immigration, as you know, and our sales have been like the lowest, probably the lowest per capita in Canadian history. So like immigration's a lagging thing, right? We may be in trouble in 5 years from now or 10 years from now, but a lot of
And
these
that's if
immigrants
they
might leave.
stay.
Yeah, they might leave. So yeah, the now for prices. Okay, so this is the number of sales. Inventory has been building over the last few years. We're seeing higher highs and higher lows with the inventory. And there's another chart on my Twitter. You can look down through there and find it. And this is a national chart also. And we went through a period of having, lower lows and lower highs, meaning there was less inventory. So yeah, we're seeing higher lows and higher highs, meaning inventory is building. Now, it's hard to see inventory because every month it changes, right? And in June is peak inventory, right? So you're going to see a lot higher months of inventory than you will see in January. But it's seasonal. But again, this is why we're looking at those higher lows and higher highs, because it is trending up now over the last few years. Now, when it comes to prices, everybody loves the February hype, right? We get into the new year and this is it. Now you better, and it's the same thing every year. You better buy now because this is your last chance. And this is what happened in 2022. This is what
Mm-hmm.
happened in 2023. And this is what's happening this year. You better buy now because this is the last chance. If you don't get into the market, you're probably never going to be able to get into the market again in Canada. And this is the narrative going around. Well, looking at the charts, the February month over month increase in prices, we see February is the number one month. There hasn't ever been a February on record that prices haven't gone up month over month. And it's the biggest increase
That's
out of all the
interesting.
months. So March is not going to be as big as February, generally speaking. And March sees, it's mixed. We'll see some month over month declines. We'll see some increases. But again, February is the biggest month in Canadian price increases in Canada historically. And there has never, ever been a decline on the records that we have from Korea. Now, they only go back 16 years, but still. So, yeah, don't buy into that hype of the spring market because it's the same routine every year. Then summer comes and sales slow down, and it just repeats the cycle, right? And we've been flat. The honest truth is we've been flat with prices. If you take that blow off top out of February 2022 and March 2022, depending on where you were, take away that blow off top, and we've been flat since 2021, the prices. And we've seen seasonal swings, but otherwise we've been flat. Like Canadian real estate, if you had bought anytime since 2021, your best case after fees and whatever else is breaking even. And that's your best case scenario. If you're selling, you're probably losing money if you bought in the last 3 years. So it's a pretty negative time for real estate prices in Canada. And we haven't even reached a recession yet. Just think about when the recession comes, what's going to happen.
Well, yeah, that's true. And you mentioned that prices are flat, and we're talking about nominal prices. Obviously, if somebody bought in 2021 and then they sold in 2024, like what they can buy with that money has probably gone down by 20-30%. And I know the government's going to say, oh, it's 10-15%. But the reality is it doesn't matter what the government's saying. It's what you can actually buy with that money. So you're actually seeing like real inflation adjusted prices really going down then, even if it's just maintaining flat. And a lot of people kind of miss that dynamic, I think, a little bit. And they don't understand that obviously that affects prices as well. Real prices, I think, are even more important than nominal. I'm going to bring up a chart that is really interesting chart on your Twitter, actually. It's the chart with all the different markets across Canada, from buyer's market to overheated seller's market. So on the one end, you've got Calgary, and at the buyer's market end, you've got Interior BC, Okanagan, which is really interesting to me, John, because the Okanagan was like, it was just blowing up in 2021. Like loads of people were buying Airbnbs, investment property. Like that's a market that I've really been tracking and monitoring. And now it's completely flip side of that. So, let's segue into talking about Calgary a little bit. I know you wanted to talk about this. So what is going on in Calgary?
Calgary. So I'm not a local expert, obviously, in Calgary,
No.
right? But even in Ontario, which is a crazy thing, I know what's going on in Calgary, or partially what's going on in Calgary, because I literally get emails from agents trying to sell homes or trying to promote homes for sale in Calgary. And
Wow.
so that whole get rich quick investment scheme or speculative investment scheme from Ontario has moved to other places. And probably the number one place would be Calgary. And I'm sure people from BC have moved into speculating in Calgary. And of course, I just posted on my Twitter again just a few days ago because I thought it was hilarious because it's the same propaganda. They're not trying to sell homes. These are not end users buying these homes in Calgary and driving the market insane. Yeah, there's a lot of people moving there because of the price points, I'm sure. But, they're targeting investors and speculators and looking at, I got this ad here from some realtor. And all they're doing is promoting, like, it just lies on here. Like, people pointed this out. I didn't actually scrutinize it too much. But, of course, they're saying cash flow positive. Rents will easily cover your carrying costs. The number one thing, and I don't know if you can put this on the screen or not, but it's it's just hilarious. It says, invest in Canada's next big housing market, Calgary. So it's like the next, Ponzi, part of the Ponzi. They need to like filter that money or get more buyers into this scheme by going to Calgary now, because in Ontario, it just doesn't make sense. Like if you buy a house in Ontario, especially a pre-construction home, you're going to be losing anywhere from and it's not small amounts of money. You're going to be losing $1,000 to like $3,000 a month on cash flow just from buying a house or a condo. I have people contact me, that watch my channel and they ask me for advice. And I feel bad for them because they were led into this by dishonest realtors just pumping the market, saying prices will never go down. And they're like, they have these condos in Toronto and they're spending, $6,000 a month. Like, this is not an exaggeration.
Wow.
$6,000 a month to carry these places. The mortgages are over $800,000 plus the fees, and they're collecting like $3,000. Like, it's insane. And they're hoping to wait the market out so that the condos go back up. And I don't study in detail into condos because we don't have a lot in Niagara, so it really doesn't affect me. But I do listen to the rhetoric, and I actually had agents calling me this week, desperately trying to sell me this condo or get me to sell this condo, and offering a $10,000 bonus in Grimsby to sell this condo. And I watch what's his name, Rob Mersaglio. He does a bunch of stuff in Toronto and Durham and stuff. And yeah, he's saying like the condo market's in trouble. And we've seen the
Hmm.
condo market in trouble before. Like every time there's a real estate crisis or downturn, the condo market just gets obliterated. And it's happening now. That's what's happening with the condo market. And yeah, it just doesn't make sense, right?
This video was powered by ExpressVPN, helping you get around the censorship laws in Canada. Go to expressvpn.com/market mania if you're interested in a VPN. Yeah, and I think that I just think that condos in general are just terrible when you think about it. If it's a long-term investment anyway, because I mean the value of maintenance for a building is only going to go up. These condo fees are starting at eye-watering amounts, and then you've only got to think as well. When I look at real estate or property, the most of the value is actually in the land. The actual house is a depreciating asset because you have to maintain it, property taxes. It's basically a liability, but the land is what's meant to increase in value. And with a condo, you don't own any land. Like you own a little box in the sky.
Even if you bought, to me, I would never buy a condo unless I didn't live in the country and I had to like leave and just come back, or I only lived here part time. Then,
Right.
I
Yeah.
can't take care of the grass, and it's just easier. But condos to me are liabilities. Even if you pay for them free and clear, they're liabilities because you don't know what's going to happen with that corporation. Are they going to increase the
No.
fees? Are there going to be special assessments? Like, you're at the mercy of the condo board and the structure of the maintenance as a whole. So,
Yeah.
and yeah, the condo fees have like skyrocketed, whether it's Ontario, or I don't know how it is in Calgary, but I'm sure it's the same in
Yeah.
Florida,
It's the
whether it's
same.
insurance reasons. Like, it's just skyrocketed everywhere. You're paying, like, you might as well just round it off to $1,000 a month at this point for
Yeah.
condo fees, which is absurd. It's totally absurd. So yeah, they're going to get hit the hardest because of that financial liability, in my opinion. So
Yeah, I think that the condos are just not a good thing, and I can tell you a little story. Like there was one building that was in South Calgary, and basically the developer that built that building went bankrupt like a couple of years after they built it, and then they had no recourse to basically go back to them because they had a lot of building issues, structural issues with the building. So what happened is they had to put that into the condo fee and pass it on to the people who own there, and it ended up their condo fees absolutely skyrocketed. Like you were paying like $2,000 a month in condo fees on a 2-bedroom, and what happened to the real estate values was they were 50% less than everywhere else because everyone was taking into account like the condo fee. Yeah, it was really, really interesting anyway. So that's always a risk. And especially when you're actually seeing more and more developers go bankrupt in Canada. So that's actually a big risk.
yeah, no, it's a good point. And I've seen, like, over the years, I've seen myself and I've heard stories even prior to paying attention to condos where, stucco would fall off the building and everyone gets hit with a special assessment. And then the developer just claims bankruptcy and they're left to pay it. And everyone
Mm.
has to pay like 20, 25 grand. Or the one, I'm going to do another field trip next week. But I'll tell you now, like, there's one in my region that collapsed. They were building it and it collapsed, and it was like a big deal. So of course, the media is circling around this, and then it collapses again for the second time, like while it's already collapsed the first time. And then they own another
Jeez.
building that they're getting sued on, and this place is years old, and the pool has never been put into service, and all these amenities aren't even in service yet. And these people have lived in these for years. And of course, this building was purchased by speculators and investors, and
Hmm.
so this is, yeah, the quality And especially when the quality goes downhill on a condo, it's like such huge costs to rectify it. It's insane. So yeah, be very careful in which condo building you buy into if you do elect to buy into one is my advice.
Yeah, for sure. That is good advice. And I'm just pulling up on the screen right now. It's basically just all the Calgary rentals, and I'm just looking at single family homes right now. And this blew my mind because I hadn't looked at this in a while. I looked to see how many rentals there were of single family homes, and it has just exploded. So it's not just condos, townhomes, duplexes, which people are buying. It's a lot of houses, and the inventory for rentals in Calgary has exploded as well. Like I'm looking right now, there's over 4,000 units for rent in Calgary. That's single family homes, duplexes. And this is just on this one website. There might be, I mean, this is the most popular. But even if you like zoom in on an area or a neighborhood, there's just literally every street, John. So when you look at the real estate market and you look at how hot it is, and then you look at all these rentals coming online, it kind of, you put two and two together, you connect the dots and realize there's a lot of speculation going on.
Oh yeah, so now it's in Toronto. It's funny because they list most of them on realtor.ca. So you can literally go to like realtor.ca in Toronto and just like click for sale and then see how many listings. I'm going to do it right now actually. And it's insane. I just did it in Calgary and you had like 2 listings for lease on realtor.ca. So like realtor.ca is not like a big source to lease them there. But I just want to look in Toronto real quick here. So yeah, if you like just leave Toronto and you can see the surrounding areas, there's what, 12,746 listings for rent. And then
Wow.
for sale, there's 13,510. So like there's almost as many listings. There's pretty much an equal number of listings for sale as there is for rent in Toronto right now, which is insane.
Wow.
Like, and I did the data on this. Like I pulled the MLS data, and last time I did it, I think it was 2023 for the whole year. Realtors are now leasing more places than they're selling in Toronto, which has never been the case, right? So
Wow.
the speculative purchasing, they all have to rent them out, and they think they're going to hold on to them, and they're all going to shoot up in value. So they're $2 million or something every. Well, in Toronto, the houses would be $2 million. I guess $5 million every house is going to be worth now.
Yeah.
Which could be the case if they keep printing money, but not. We're going to see a crash or a recession first, and that's another thing people don't understand. They think, yeah, they're right. If the government, they'll come in and start bailing people out again and bailing the banks out, and just like they did with GM and all the big automakers back in 2008 or whenever they crashed. They're gonna, do that at some point, but not until after a big crash, right? They're not going to do it before a big crash. People think they are,
No.
but it's not going to happen. We're going to go through the cycle. People are going to lose their shirts, and then they're going to start the stimulus again. And yeah, at that point, it probably is a good point or a good time to buy, maybe in
Yeah.
3 to 5 years from now. But yeah, buying now is just insane because we're like still at the top of the bubble.
Yeah, yeah. Well, I think people get it generally wrong as well when it comes to the debasement of the money because they think that, oh, this just expands, like it can only expand. But when the majority of the money supply that's created is credit, well, it can actually go down. We saw that last year in the United States or the year before. I can't remember where the money supply actually started to go down. Even in Canada, it really started to flatten out. So it can really happen, especially where you have a credit event, because people are just so leveraged. Like in a cash environment, I would agree with people that when they debase the currency, that's going to have a massive effect and drive up prices. But when you're leveraging, it's totally different. It's almost like when you get margin calls and you're trading like securities or whatever. Like it's the same thing when you're obviously using leverage to buy a house. If that house goes against you too much and then you come to renew, you're essentially a margin call if you can't add the capital to that. And I think I read something like just over 10% of mortgages are underwater right now. You might have better data on that than me.
So the mortgage, yeah, I do track the mortgage arrears. It's still historically very low. But
Yeah.
when you're talking about negative amortizations, yeah, it's like a huge number. They don't even release it anymore, but there was like 30% at certain banks were negatively amortized. Like, so who knows? They've been hiding the information. And the problem now, if you look at the mortgage arrears data, back prior, the last cycle, it was more accurate because there wasn't that many alternative lenders and B lenders and private lending, companies that did it.
Hmm.
Nowadays, like when I look at the defaults or the power of sales on the MLS, the majority are from private and like unknown non-bank lending companies. So we're seeing this, like we can't really track the real numbers of mortgage arrears and defaults. And we can do it two different ways. We can look at mortgage arrears, but again, it's like 10 banks or something in Canada, and
Hmm.
or maybe 12. And you have like National Bank and Manulife Bank and stuff, and of course the big five. But then when you get into the actual number of power of sales, you have to kind of weekly track it or monthly track it on MLS, and literally go through the owners' names or who's holding the forcing the power of sale, I should say. And again, most of them are still like the B lenders or the private lenders. So it's hard to track, right? It's very hard to track this information. But yeah, there's tons of people that are underwater, and it's just it's a ticking time bomb, and we're going to see it's going to unfold, and it is unfolding right now. It's
Yeah.
I see it, I hear about it every day. I get calls looking for advice, and I'm not a financial advisor. I don't know why they call me, but I guess they just want to know if they should sell it or hang on to the house. And it's a tough decision. The calls I get
Yeah.
are literally, do I keep renting this house at a loss, or do I hang on to it at a loss and hope that it goes back up? And I can't even give them the answer, because I said, like, you're going to have to hang on to this thing for years. If you can hang on to it for years, then maybe you do hang on to it. But it's tough to advise people in these situations. They're kind of just like, how do you cut your losses the easiest way, or to reduce your losses? And that's what people don't realize. These small so-called investors and speculators, they don't understand the concept of when and how to cut your losses. You're just holding on, and this is the worst thing you could do, is hold on, because again, it's been 3 years and they haven't gone up, these prices, and they're not going to go up now with the way the economy is going, and of course the way that all the rest of these indicators are going, with whether it's unemployment going to creep up and interest rates are going to get cut. And it's going to be opposite when interest rates get cut up, what most people think, right? And
Yes.
it doesn't make sense. Like, I don't even know if we talked about this before, but let's say interest rates get cut, right? So the theory is out there with the lay people and the market pumpers, that interest rates are going to get cut and prices are going to go up again because now it's cheaper. Well, first of all, people can't afford the homes right now. So if you
Hmm.
cut the interest rates, which makes lending cheaper, your debt cheaper, and the house prices go up, you're still paying the same amount. So how does
Yeah.
that help? Like, it's just insane, like the theories I hear. But I guess whatever, this is what they believe. But we know, and from the charts that I put together, when interest rates start getting cut, prices go down with them, and
Yeah.
people cannot comprehend why that happens. And of course, it happens because it's we're in trouble, and then there's a lag time for those low interest rates to work. And again, we'll just keep repeating this cycle until I guess the dollar's worthless. I don't know. I think that's the end game, right? Central
Yeah.
bank digital currency, reset everything.
Yes, yeah, yeah. Basically, more surveillance on everything from the state. And that's happening when it comes to YouTube or whatever it is. If people can't afford to eat, like, that is a fundamental economic failure. And these people have jobs. These people
Mm-hmm.
have jobs. One thing that happened a while ago, but for some reason I saw Bet Dwelling just put out another article on it. It was really good. You probably saw it, which was about how much of the government's deficit they're spending on buying these CMBs. Again, like, I kind of see that as they're supplying liquidity to the banks. We don't know which mortgages they're purchasing. It could be all the bad ones, and then they're putting them on the taxpayers' dollar. But you just got to ask, like, injecting liquidity to encourage banks to lend at this time, does that seem like a good time to do that?
Well, I think the problem is, and of course, we've seen those whatever those swaps are, those midnight swaps, or whatever they do,
Repo, yeah.
the repo market, and the problem is, I think that the banks, they are lacking liquidity by the sounds of it.
Yeah.
So first it was the Bank of Canada doing the repos, and now it's the government spending $30 billion to purchase. And if you look at the numbers, like, it's what, a $40 billion deficit we're supposed to run this year, and they've already, and 30 billion goes to the CMBs, and they've already spent like half of it or something. Like it's only like March, so like it's not going to
Yeah.
last, and then they're going to be looking for the next shot of liquidity into the market. So and it makes sense, right? There's so much when you have so much debt, whether you're a bank or whether you're just an individual like me and you, your liquidity dries up from servicing these debts. Like the banks are
Yeah.
servicing all these. Like I have GICs with the bank, they're paying me interest, right? That's I'm like instead of
Yeah.
money sitting in an account, they have to pay me. So of course they're hurting, and we'll see. They don't even carry cash anymore. I have like stories of people that went in for, asked for $2,000 cash, and the bank teller's sweating because they don't have it, like, and they have to like order it in.
Yeah, yeah. I mean, I remember even when we moved to Alberta way back, it was the same thing. Like because we had to move banks and we were trying to get the money out in the most cost-effective way. And I said, well, just give it to me in cash because they charge for every other method, you know, draft, wire, whatever it is. So
Yeah.
anyway, they were like, we don't have the cash. You'd have to order it. And I was like, okay, I'll order it then. How long is that going to take? 3 weeks. And I'm like, what? 3 weeks? I'm like, in the end, they just gave me a bank draft for free. It's anything to keep the money within the ledger and not actually produce something physical. And
Yeah.
that's the only constraint that we have is cash on the banking system now. And that's why they're trying to get rid of it, in my opinion.
Yeah, we the whole system, whether it's personal debt or corporate debt, it's all just this big mirage of noise, right? Because we don't.
Yeah.
At the end of the day, it's a very simple equation. You borrow too much money, you have to pay it back, and you're subject to interest rates. So everybody borrowed a bunch of money, whether it's corporations, banks, Bank of Canada, the government, whoever it was, and now they have to pay it back, and it's hurting them, and it's sucking money out of other areas that they should be spending it on. They should be spending it on servicing Canadians, but they have to spend it on servicing debt. And of course, yeah, they try to inflate some of that debt away, but there's only so much you can inflate away, and it takes time to do that, right? So yeah, we're
Hmm.
people in corporations, they're hurting, and especially the small corporations and small businesses. Like we have like record bankruptcy in the small business sector. Like I looked at a chart and it was just like through the roof, right? And it's
Yeah, I've
because you
seen
have
that chart.
that combination of course, well, the market now is taking its toll with lower spending. You have the debt, and of course you have those CEBA loans that had to be paid back in Canada. So you have all this debt coming due on these small businesses, and they're just like throwing in the towel and saying, yeah, we're just gonna fold this company, and I'll start again at some other point in time, right? So
Yeah, yeah, yeah. It's sad, but yeah, it's what you would expect with the amount of debt in the system. I think people forget that it's not just the household, it's the private businesses as well. And it's also the government. Like it's all the entities within the economy. But I think the thing I see like in the future, and I'm like, I don't see a way out of this. And maybe you can, or maybe you have a different perspective on this. I'd love to get your idea on this. But basically, the way I see it is like they keep inflating, and it's got to the point now that obviously the numbers are so broken that they produce that everybody can work it out, and the raises people aren't getting, even if they're getting 3-4% rise, inflation in reality is 10%. It doesn't matter what the government is. So it's eating up so much of their budget that they're now running on fumes, essentially, where they're borrowing to just live through their daily expenses. And I'm like, you see the inflation coming down right now because of that, because essentially like all these things like clothing on the last CPI that we just had a couple of weeks ago was a big drawdown there. And it's no wonder because that's no necessity for people.
nobody can
But
afford to buy the clothing. That's why it came down. They have to
exactly,
put it on sale.
exactly. But I don't understand like how you can say there's going to be a soft landing. I mean, we would need like significant deflation in order to bring back the equilibrium to a point where, people are actually breaking even. So I'm just like, even if they try and inflate again, I think it's just going to be like Japan, where they went down that route and it literally just did nothing. And they've been
Which
doing it for decades.
it's just kicking the can, right? That's just another way. So
This video is powered by ExpressVPN, helping you get around the censorship laws in Canada. Go to expressvpn.com/market mania if you're interested in a VPN.
where we are right now, in my opinion, and it's very simple. Like I all I do is think about numbers every day. It's crazy, right? But it's like I keep coming back, circling back around. So it's you have to fight inflation, or you're fighting the debt. So it's one or the other, right? There's no easy way out. And they talk about a soft landing in this perfect world, which you've never seen a soft landing supposedly. And I've looked myself, and there's always been a recession of some kind. So
Yeah.
yeah, to have a soft landing, that's dreaming. That's just telling people what they want to hear. That's like when the plane's going to crash and you're telling them it's not going to crash. There's got no wings on it anymore. And but there was I listened to something the other day, and it had like what was the guy, the Fed Bernanke or whatever his name was, right back in what it was he in prior to 2008. And it was like the
Hmm.
same things they were saying back then that they're saying now,
Yeah.
like, the banks are failing. Oh, we're going to get this under control, no problem. And it was just like, it was the same story. And until they finally failed. And then they were like, oh boy, it's failed. We need to, bail them out and whatever else. And this is what they'll do. They will, but we're going to see pain first, because if they start that stimulus too soon, or if they drop those rates too soon and give that debt relief to these, speculative people that purchase too much on debt, well, you're first of all, you're rewarding people, but people are just going to start buying more, and inflation's going to, so you either have inflation or you have some pain with higher debt servicing costs, and then that's it. There's no other way. And
Hmm.
time, right? Okay, time goes, and time's going to help a bit, but ultimately the debt is only catching up now, right? We're not even there. Like, these people, the reason we have inflation, like most of the inflation now, and they're talking about how low it is, we actually need deflation. Like 2% garbage. We shouldn't even have 2%. We should actually have deflation. The majority of inflation is the mortgage debt costs. It's not even, it's shelter adds to it, but it's actually more the debt servicing costs on mortgages. And that's not going to go away for years, because people are going to be renewing at higher rates, much higher rates, for like 2 to 3 years, depending on how quick they drop rates when they do start dropping them. So yeah, we're not going to get away from this inflation fight, and it's going to be sticky. And now look at April 1st, we got carbon tax, which isn't just going to affect 3 or 4 cents on your gasoline. It's going to affect everything. Like, it's going to
Yeah.
affect all the truckers and the groceries, and everything's going to go up. Minimum wage is going up. Of course, that's what keeps inflation sticky, because, first of all, everyone charges more. Then when they say, well, we need more money because I can't afford these items. I need more money to buy a house. So you're going
Yeah.
to see wage inflation. And you got all these things, even the liquor and the beer is the tax is going up April 1st. We got all these new taxes coming. So like, inflation's not going to go away anytime soon. Deflation, that's what we need. Everybody hates the word deflation, but it's like, this is what you need. I was listening to an audio book. I forget who it was from, something Webb or something, the guy's name. It's probably famous. I don't know. I don't read that much, but I was listening to his book, and yeah, he was saying technology is actually deflationary, right?
Yeah. Yeah.
So we're getting all this. We're getting this time of like AI and stuff, and people are just they're learning how to use it, and that's going to take a lot of people out of the workforce, and we're going to see like technological deflation coming, and it's going to be a big pressure. So they're going to be fighting deflation, I believe, at some point, not inflation. But inflation in the near term, but deflation in a few years or years out from now. And that's what I think, and it makes sense, right?
Yeah, yeah, that would make sense with a lot of different things as well. Yeah, and I guess it depends as well what their fiscal response is going to be during the next crisis, because I just don't see how they don't do stimulus again. Because even if you look, and I know a lot of people are like idolizing Pierre and the conservatives and thinking that everything is just going to be great, and I think that comes from like, because we've had such a bad leader, Trudeau, of the country, and Freeland
Oh
and
yeah.
all that. They've been so bad that people are like, oh my God, some hope finally, because Pierre will be better than Trudeau. But, it could take a school child to be better than Trudeau. But the funny thing is, like, I just think that stimulus response is just going to come, because people, otherwise it will literally be a depression. And you can kind of already see us inching towards that right now. Like, it's not good. Like, just look at food banks, for instance, food bank usage. I mean, if people can't afford to eat, like, that is a fundamental economic failure. And these people have jobs. These people
Mm-hmm.
have jobs. I remember reading one of the food bank reports from Harvest. I forget the rest of their name, but anyway, it was saying that they have a lot of people earning over $100,000 in Toronto go into the food bank. So, people are squeezed massively right now, and I don't see how you kind of reverse out of that without stimulus, because that's what people are going to beg for. And that's kind of what happened during the pandemic. Like, I mean, at one point, I think it was like a fifth of people were on CERB or something like that. Fortunately, I don't even see a solution, John. I mean, do you? I don't see a solution in a way, because I mean, it's impossible, isn't it? Like, you can't just say, no, we're not doing anything, and then like homeless skyrockets. But then if you're going to do stimulus, like, there's a massive trade-off which comes with inflation, because you're not producing all that stuff. So you end up with the same net result.
Who is it? Kevin O'Leary always says it the best, right? First of all, he says we got the worst prime minister in history right now, which is true. And regardless
Yeah.
if you like him or not because of his ideology, a lot of people are ideologically driven why they like him or don't like him, right? But when
Yeah.
you're looking at the numbers, he is the worst, because Canada is the richest country in the world, right? And this is Kevin O'Leary that says this, and you know what, I like some of what he says and other things. I don't idolize the guy. I don't idolize anybody, actually. And he said we are the richest country in the world per capita because of all their natural resources, and this is how we reclaim our wealth as a country. And for the average working person is by unlocking those resources, you know, and getting people working and producing something. Because if you don't produce anything, you have you need sorry, if you don't produce anything, you need to stimulate the economy with printed money, and this is what's going to keep happening, and this is what Trudeau has done. And and of course he's totally against any resource sector jobs, and I don't know how, like, I don't even know what his plan is, like, to that. I don't know, we all do yoga or something, like, it just doesn't make sense, like.
Yeah.
I can't even understand. Like, he says, well, everybody like should be driving electric cars or taking public transit, and it doesn't work. Like in most of
No.
Canada, like Canada is like a driving country, and electric cars, you know, there's other solutions, but these aren't realistic because the power grid couldn't handle it. They're just so flawed, like the whole system. We
Yes.
need to. And again, you got like other countries that are like just mining coal, and China's what, putting a one coal-fired plant a month or a week online, like, and we could be selling them natural gas that's like way cleaner, but you know, Trudeau doesn't want to do it. He wants to like save the world or save the environment because he's a globalist, right? He's like, obviously it's not a conspiracy. He's a globalist, and all his ministers are globalists, and they can't even answer a
Yeah.
basic question. Like at
Yes.
Freeland yesterday, what was she being asked about? Said, "Oh, how much money have they collected in carbon tax?" And she just couldn't and wouldn't answer it. Like it's like, because it just doesn't make sense. And but again, this is the hysterio, mysterio, whatever world we live in with the current government, and it's sad. But you're right. The next government, they'll be okay in the beginning, and maybe things will get better. But you know, everyone will hate them too at some point. We need like radical like reform in the way we vote or something like. And of course, Trudeau was supposed to do that, which he didn't do, voter reform. But yeah, I don't know. I think that at the end of the day, people need to produce something. We're in this kindergarten country now where everybody wins a prize, no matter if you work or not, and this is the way it is. And well, we'll just give you money, and that we're going to print, and that causes inflation. And inflation is the worst. Like even the I've
Hmm.
said it before, but even the RCMP are saying, like, you know, with house prices, with people not being able to afford homes, like the younger generation, it's like it's going to destabilize the country. Like
Yeah.
any of these countries, like Zimbabwe or Venezuela, that have a massive inflation, you see people out there burning the country down. This is what's going to happen, and
Yeah.
so we can't have inflation. They have to cut it out. In the short term, we need deflation of some kind. And this is what's good, because it will be literally taking from the haves and giving it a little bit back to the have-nots. Yeah, there'll be job losses and stuff for a bit, but this is what it takes to survive, right? You can't
Hmm.
have everything. The worst thing you can do, and I'm guilty of it even with my kids, is like give them everything and they never have to work. That's the worst thing you can do to somebody, right? Like
Yeah.
and this is what this country has kind of been run like. Well, don't worry, we're going to have social programs for everybody, and we'll just print a bunch of money. And no, this is not how it's supposed to work. You need survival skills. You work or you starve. Like that's
Hmm.
how life is, but we've gotten away from that far too much. I know some people can't work, and that's fine, right? But for the
Yeah.
most part, people, I call it the Canadian retirement. They just like go on some sort of social assistance that they don't even need because they're just like, whatever, I'm just gonna like, I got anxiety, so I'm just gonna like take disability and sit at home or whatever. And again, there's
Yeah.
legitimate reasons for it, but there's too many people milking the system. And like even the food bank usage, you have students come to Canada and they're like bragging, "Hey, I go to a food bank, get free food in Canada."
Yeah.
It's
Yeah.
being abused, right? There's too many people abusing it, and that's the problem. We need work.
Yeah.
And I think the one thing that Pierre is right about, though, is yes, and he's not perfect. And I saw your chart earlier; like they printed more money too, right? Back in
Hmm.
after the last cycle. So,
Hmm.
but the one thing we need paychecks, right? And this is what we need. We need to have people working. We need to produce something more as a country, and this is
Yeah.
how we make things better, not by sitting on our asses looking for free handouts. And I don't know,
Oh yeah.
when they're handing you $100, but you know the bread costs $50, like it's not a good solution. That's what they're doing now, pretty much at a a different scale, obviously. So
Yeah, yeah, no, you're totally right about that. And I think like as well, like I mean the problem is like Pierre, he really does say all the right things and he's a smart guy. I gotta give him that. Like he is 10 times the guy of Trudeau. Like Trudeau is an idiot when it really comes down to I don't think he's
hmm
very clever in the way he comes across. Pierre is very well spoken and he seems to think things through really, really well on the spot. But, you know, when I was looking recently, again, a subscriber brought this to my attention that, like, the Alberta government here in Alberta, which you could probably say is the most conservative in Canada, maybe Saskatchewan, but probably Alberta, the last premier before the one we have right now is now on the board at ATCO, which is one of the big gas companies that charges all these obscene fees to Albertans. And it's just
hmm
like, you know, the corruption is so like in your face and we just kind of glaze over it. And I think this is the major problem. You have this oligarchy set up where essentially you've got government officials going into big companies, you've got these massive companies lobbying and lobbying and lobbying government to have things the way they want it. Media organizations, there's a monopoly on that. Airlines, food. We just don't have enough competition because think about it. If they cut the red tape by 90%, more and more people are likely to come in and essentially start businesses. But if you just keep disincentivizing it by more taxes, more red tape, then it's not going to happen. And the same way, if you just make all these laws, like the airline one is one that I always use as an example, where so much of the airline has got to be Canadian owned. Well, that's completely ridiculous. And all that does is it works for WestJet, Air Canada, the huge companies, because they've got the capital, they've got the resources, they're well established. And as we've just seen with Lynx, like Lynx and all these ultra cost airlines that are struggling, it looks like Flair might possibly go bankrupt by the time this video goes because they're in trouble. But if you look what's happened to airfares over the past couple of years, they've gone down. So you had like deflation because of the increase in competition. And it would be exactly the same with grocery stores. And I think part of the problem is that there's just no incentive, like everything's so monopolized when it comes to logistics. It doesn't matter what it is, that it's impossible for a new player to get in and compete.
Yeah, it's all the trade laws and trade agreements and things like that. Like I just went shopping in the States. Like I don't go there usually, but I'm right by the border and I went and got some Irish butter because it's like real butter instead of like the soy based whatever stuff they feed the cows here. It's like when you scrape
Hmm.
it off after you take it out of the fridge in 2 minutes, it's actually like comes out off like butter with the knife, right? Where ours is
Yeah.
like flaking off like a brick of lard or something. It's like it's not even the same, but and it's like way cheaper, right? In the States too. So it's, yeah, we have all this protectionism and, it should be called buy Canadian, but they actually don't give you the choice. They force you to do it. The airlines, they always, it's like these small airlines, they always go bankrupt. I've never seen one succeed. Like
Hmm.
it's going to
Yeah.
remain at the end of the day. It's what Air Canada and something else, right?
WestJet.
back in, yeah, WestJet. It used to be Canadian Airways or something back in like the
Oh, right.
90s or something. Yeah, but yeah, now it's WestJet and Air Canada, and of course you have the smaller ones in Porter, but they're smart. They've been around for a long time. But the national ones are, yeah, they it's just they can't continue, right? It's just the cost of fuel, the carbon tax will probably wipe them out on April 1st.
Wow, yeah. I saw they're in big problems with Flair. I know there's jet lines out of Ontario and there's a couple of others that have popped up, but they all popped up when interest rates were really low, including Lynx. So they borrowed money to get the planes and do everything. And obviously that is just really just been a recipe for disaster, unfortunately, for them. Anyway, John, thank you so much for coming on. Do you want to offer any words of wisdom before you go here?
Of course, as always, I would say for the spring market, don't listen to the noise. You could have bought a house like 3 months ago for $50,000 less. So don't go run out there and FOMO into buying a house. Take your time. If now is the right time to buy for you, sometimes it is, right? It is the right time. Sure, buy a house. That's great if it makes sense on paper, and you don't mind if it goes down 50, 100, 200,000. If we get into really bad times, then it's great. But don't FOMO into buying homes because the spring market's here. And I think you're going to see the spring market end early this year. Wait a few more months at least, and yeah, that's my general advice for now.
All right. Thank you so much, John. And go over to his channel, check him out on Twitter. He puts out so much interesting data and things that you can dive through on his Twitter. And go check him out on YouTube as well. Just doing great work. Thank you so much, John, for coming on. Anyway, thank you for tuning in to this episode. I will see you on the next one. Take care.
Thanks.